Hello, everyone, and welcome back to the Dinar Daily, your source for breaking updates and crucial insights for dinar and global currency enthusiasts. Today, we bring you a truly historic development. After years of speculation and waiting, the Iraqi dinar has reached an unprecedented all-time high on the global foreign exchange market. This is a story that has stunned analysts, traders, and investors across the world. For decades, those holding the Iraqi dinar maintained their faith through periods of immense hardship, including war, economic sanctions, volatile oil prices, and prolonged political and financial stagnation. The question of whether this day would ever arrive has finally been answered, as the charts now show a remarkable recovery. The IQD is currently stronger than it has been at any point since its modern currency issuance. We'll be doing a comprehensive report to analyze this phenomenon, covering the specific forex data, the domestic reforms that made this possible, the international reactions, and what this means for current holders of the currency. For many years, the Iraqi dinar, IQD, has existed in a state of paradox, representing both potential and profound disappointment within global financial circles. Its history is a testament to Iraq's economic journey. During the 1970s and 1980s, the dinar was recognized as one of the most robust currencies in the region, largely due to Iraq's significant oil reserves, a healthy balance of government reserves, and a generally stable economic environment. However, this era of stability ended abruptly following the Gulf Wars, which led to severe international sanctions and a prolonged period of instability. By the early 2000s, the currency had lost much of its international standing and became heavily devalued, trading at a small fraction of a US dollar. It was relegated to a niche asset, primarily held by a small group of investors who remained hopeful for its eventual recovery. As the currency's value plummeted, mainstream financial institutions placed significant restrictions on dinar transactions, and regulators frequently advised investors against placing too much confidence in it. Many financial analysts went as far as to label it a dead market, suggesting its recovery was a remote possibility. Yet, history has a way of defying even the most entrenched assumptions. This year, as real-time forex tickers displayed live price feeds, the IQD unexpectedly surged, breaking through all its previous post-2003 benchmarks. At 9 a.m. GMT, the exchange rate crossed a pivotal threshold, an event that financial journalists quickly identified as one of the most significant currency stories of the decade. The surge represented a near doubling of its value from the previous year's baseline, an outcome that no major institutional forecast had predicted. The sudden and dramatic rise of the Iraqi dinar immediately captured the attention of major news outlets such as Bloomberg, Reuters, and CNBC. They not only reported on the scale of the surge but also highlighted its symbolic importance in changing global perceptions of Iraq's economy. This was not a gradual appreciation like many other emerging market currencies. Instead, it was a sudden reversal that seemed to reclaim the currency's former status. As if the IQD were making up for decades of lost ground, this rapid turn of events sparked a central question across financial circles worldwide. What confluence of factors caused this to happen now, and what does it signify for the global economic landscape going forward? The answer appears to lie in a combination of structural reforms and global economic forces that created a perfect environment for this reversal of fortune. At the heart of this dramatic shift is Iraq's primary economic engine, oil exports. In 2025, a unique combination of global energy market dynamics gave Iraq a decisive advantage. Due to supply chain disruptions and a slower-than-expected adoption of renewable energy, oil demand surged across key markets in Asia, Europe, and North America. This enabled Iraq to capitalize on both high crude prices and increased export volumes. Recent upgrades to domestic refineries and the establishment of new international trade agreements allowed the country to process a greater quantity of oil domestically, increasing its value. This substantial influx of petrodollars significantly bolstered Iraq's foreign currency reserves, providing the Central Bank of Iraq, CBI, with a powerful buffer and inspiring confidence in the dinar's stability and backing. While the increased oil revenue was a crucial factor, it doesn't fully account for the magnitude of the dinar's surge. Another equally significant driver has been Iraq's persistent anti-corruption and banking reform. For years, the dinar's value was hindered by a reputation for poor governance and financial mismanagement. However, recent initiatives have brought about tangible changes, including the implementation of digitized banking systems, modernized payment frameworks, and stricter anti-graft policies. The government has delivered on its promise of reform in a way that international markets can no longer overlook. As experienced forex traders know, transparency is the cornerstone of trust, and trust is fundamental to a currency's valuation. These reforms have laid a more solid and transparent foundation for the Iraqi financial system. Furthermore, Iraq has been actively expanding its network of international financial partnerships. Key lenders and trade allies, particularly from Europe and Asia, have extended new credit lines and formalized treaties that indicate Iraq is being carefully reintegrated into the global financial system. These partnerships are a vote of confidence, signaling that Iraq is no longer seen as a financial pariah but rather as a cautious and potentially stable participant. While each of these developments would have been noteworthy on its own, their simultaneous occurrence in 2025 created a powerful synergy that markets could not ignore. The dinar's rise is not a result of a fleeting trend or speculation. It is a reflection of genuine structural progress that analysts are only now beginning to fully appreciate. The global financial community's reaction to the IQD surge has been swift and varied, reflecting the unexpected nature of the event. Hedge funds, always on the lookout for unique opportunities, had reportedly begun building quiet positions in dinar-related instruments as early as late July. For these funds, today's breakout serves as a major vindication of their contrarian bets, proving that unconventional strategies can sometimes lead to extraordinary returns. While the full extent of their profits remains unknown, it is speculated that these early positions could result in gains that rival some of the most celebrated currency trades of the last several decades. The whisper networks and trading circles are buzzing with the sheer scale of the potential profits. In contrast to the bold moves of hedge funds, major U.S. retail banks have maintained a more cautious stance, bound by strict regulatory frameworks and a conservative approach to risk. They have largely stayed on the sidelines of the dinar market. However, regional banks in the Middle East have reacted much more quickly. They have been actively updating their internal exchange systems and clearing mechanisms to align with the new rates, a move that suggests they were either anticipating the shift or are eager to facilitate smoother cross-border transactions with Iraq. Their readiness underscores a regional confidence that has been building for some time. The most emotional and dramatic response, however, has come from retail holders. For years, these individuals, often from the diaspora, former contractors, or small-scale investors, held on to physical dinar notes, often in safes and lockboxes. Many were ridiculed by their peers and dismissed as dreamers with an unrealistic hope. Today, those same individuals are celebrating in online forums and private networks, experiencing a profound sense of vindication. News headlines have begun to capture this sentiment, with one publication even declaring, "What gold was to the 1970s, the dinar may be to the 2020s." While this comparison may be hyperbolic, it captures the powerful emotional and symbolic significance of this rally. It's more than just an increase in value. It's a restoration of confidence in a currency that was long considered broken. While the charts tell a story of numbers and market forces, the human side of the Iraqi dinar's journey is one of remarkable perseverance and faith. For decades, those who held the IQD faced a relentless stream of ridicule and doubt. They were mocked in online forums and financial circles, and conventional analysts repeatedly told them that the currency would never recover. Families around the world quietly stored notes in places like shoeboxes and safety deposit boxes, sometimes forgetting about them, other times looking at them with a mixture of skepticism and unwavering hope. To an outsider, this persistence might have seemed irrational, but for these holders it was an act of patience rooted in a deeply held belief in Iraq's eventual resurgence. Now, as the currency's surging value is broadcast across global trading platforms, that long-held patience has been financially and symbolically rewarded. The dinar's story illustrates a timeless truth about both markets and life: perseverance, in the face of long odds, can lead to extraordinary outcomes. The IQD's rise is more than just a foreign exchange story. It serves as a powerful metaphor for comebacks of all kinds. It mirrors the journey of an athlete who, after enduring injury and criticism, returns stronger than ever to achieve greatness. It is also reminiscent of nations that have rebuilt from the ashes of war into prosperous economies, or individuals who, after experiencing financial ruin, find the discipline to rebuild their lives. The story of the IQD embodies these narratives, reminding the world that resilience is not only an economic force but a profound human one as well. In many ways, the surge is less about exchange rates and more about the validation of a certain kind of faith, the belief that something broken can be repaired, that something dismissed can prove its worth, and that perseverance, though often ridiculed, holds the seeds of eventual victory. The practical implications of the IQD's surge vary depending on the time horizon and the type of holder. For retail investors and casual holders, the immediate outlook requires a careful, tiered approach. In the short term, exchange houses are likely to be the first to adjust, as they are more agile in updating retail cash-in and cash-out rates than larger institutions. This will likely trigger a flurry of activity as individuals who have waited for years rush to act. However, a word of caution is necessary, especially regarding traditional banks in the United States and Europe. Their internal compliance checks, anti-money laundering protocols, and regulatory approval processes are slow and deliberate. As a result, official recognition of the new, higher rates may lag weeks or even months behind the market's momentum. In the medium term, the future of the dinar will depend heavily on the Central Bank of Iraq's ability to sustain its pace of reform. If the CBI continues to implement digitized banking systems, ensures transparent reserve management, and increases access for international investors, the upward pressure on the IQD could be sustained and potentially even accelerate. Regional trade could also play a significant role, with countries like Jordan, Kuwait, and Saudi Arabia potentially becoming more willing to conduct transactions in dinar. Looking further ahead, long-term speculation is already circulating in financial circles. Some analysts are now openly discussing the possibility of a full-scale revaluation, which could align Iraq's currency closer to its pre-war par value. While this outcome remains speculative and is subject to both geopolitical and economic risks, today's surge has transformed what was once a remote possibility into something that feels much closer to reality. For all holders of the dinar, the range of potential outcomes has undeniably widened. The simple fact is that they now hold a currency that the world's financial markets must once again take seriously. The breakout of the Iraqi dinar does not exist in a vacuum. It has created ripple effects across the entire speculative currency landscape. This rally has reignited conversations about other currencies, most notably the Vietnamese dong, VND, and the Zimbabwe dollar, ZWL. The VND has long been considered a quiet contender in the speculative market, supported by Vietnam's consistent economic growth, strong export performance, and favorable demographics. Unlike Iraq, Vietnam's challenges have not been a result of war-induced collapse, but rather its status as a managed currency within a developing economy. Analysts believe that if Vietnam continues its path of export-driven expansion, the dong could experience its own reevaluation in the future, though it would likely be a more gradual and controlled process than the IQD's sudden surge. Meanwhile, the Zimbabwe dollar, ZWL, presents a contrasting and more cautionary tale, a currency that has been severely damaged by hyperinflation, political instability, and a chronic lack of trust in government policy. For many years, holders of the ZWL have had to contend with wild volatility, repeated currency redenominations, and the evaporation of their savings. Yet, in the wake of the IQD surge, some people are now suggesting that a renewed sense of optimism could spill over, potentially giving Zimbabwean policymakers a greater incentive to pursue the reforms necessary to stabilize their own currency. Even if the ZWL's future remains highly uncertain, the psychological impact of the dinar's rise cannot be underestimated. It serves as a powerful case study, demonstrating that currencies once considered hopeless can, with the right combination of reforms, resources, and international recognition, defy all expectations. The Iraqi dinar may have been the one to light the flame, but its glow is spreading, illuminating the entire landscape of speculative currency investing. The weight of this historic breakout is amplified when experts step forward to provide context. Ahmed al-Jabouri, a respected Iraqi economist with decades of experience in the country's fiscal systems, stated bluntly, "The forex market is rewarding Iraq for the first time in decades. This surge is not speculative. It's structural, tied to real reform." His point is a critical one, as it counters the common skepticism that dismisses emerging market rallies as mere temporary blips driven by rumor and hype. By highlighting the fundamental nature of the IQD's rise, al-Jabouri underscores that this is a direct result of genuine policy improvements and economic fundamentals, not a speculative bubble. Similarly, Lisa Turner, a US-based market strategist, known for her insights on underappreciated assets, admitted that many Western analysts were wrong. "We underestimated the dinar," she candidly said. "Today's move shows that once dismissed currencies can transform a portfolio." Her honest acknowledgement demonstrates how the surge is forcing a fundamental reassessment, even among seasoned professionals who had previously written off the IQD as a non-factor. Finally, Mark Daniels, a hedge fund analyst specializing in frontier markets, emphasized the broader implications of the event. "This surge could mark the beginning of Iraq's financial renaissance," he noted. "Smart money is paying attention." This suggests that institutional capital, often a key indicator of long-term confidence, is now actively considering Iraq as a serious investment destination. While the current moment is undeniably electrifying, it is crucial to temper excitement with a healthy dose of caution. The foreign exchange market is by its very nature one of the most volatile arenas in finance, and even the most promising surges can be followed by equally dramatic corrections. Seasoned traders can recount numerous examples of spectacular rallies that were quickly reversed. This reality does not diminish the significance of the IQD surge, but it serves as a vital reminder for all participants to remain disciplined rather than euphoric. Maintaining a level-headed approach is essential to navigating this period of transition. Another significant concern is the inevitable rise of opportunistic scammers. History shows that whenever a currency or a commodity becomes a global headline, fraudsters emerge to take advantage, luring unsuspecting individuals into fake get-rich-quick schemes. Social media platforms are already filled with exaggerated promises, offers of counterfeit exchanges, and misleading financial pitches. It is absolutely essential for investors to stick to reputable sources, official channels, and licensed professionals. Verification is the most important safeguard against falling prey to the noise and deception. Finally, even as the forex tickers display new, higher values, it's important for retail investors to remember that official banking systems often operate on a different, much slower timeline. The processes for compliance checks, central bank policy updates, and international settlement frameworks can cause a significant delay in the reflection of these rates in physical exchanges. This gap between wholesale market rates and the reality of retail conversions can be frustrating for holders, but it is a normal part of any major financial transition. The core lesson here is clear: patience, verification, and a strict adherence to financial laws are the best defenses against a historic opportunity turning into a moment of regret. While excitement can fuel momentum, caution is the only thing that ensures longevity. At its core, the story of the IQD surge is a testament to more than just economics. It is a story about endurance, belief, and the triumph of patience. For years, countless individuals held on to their dinar notes, enduring ridicule from skeptics, navigating the uncertainty of shifting geopolitical winds, and fighting the gnawing doubt of whether the wait would ever end. Today, that long wait has been rewarded with undeniable proof that a deferred dream is not necessarily a denied one. History has shown us time and again that true transformation often seems to happen suddenly, but it is always the culmination of years of hidden preparation. Just like a seed that quietly develops its roots underground for a long time before finally breaking through the soil into the light, the dinar has now emerged from obscurity into the global spotlight. Its rise is a powerful reminder that the greatest victories often arrive not in small, steady increments but in dramatic, sudden breakthroughs. For those who believed in this journey, this is far more than a simple currency event. It is a profound validation of their vision and courage. And yet, the story is far from over. The days and years ahead will test whether this momentum can evolve into lasting stability. This is why staying informed, connected, and disciplined is more important than ever. So, let this moment be both a celebration and a source of motivation. Hold on to hope, because the tide of history often favors those who do not give up. Your patience, your vision, and your resilience matter more than you may realize. If you found this report valuable, please support our mission by hitting the like button, subscribing to the Dinar Daily, and sharing this update with others who need to understand the significance of this milestone. As always, remember that this content is for informational purposes only. It is not financial advice. Always consult with licensed professionals before making any investment decisions. Stay motivated, stay hopeful, and stay tuned because history is being written right now, and you are witnessing it firsthand.